Today we're going to look at asset disposal and note 3, the fixed assets notes for the financial statements. So the first thing, we're going to look at the information they give me. In this one they also want us to do ratios, but we will do that at a later stage. So we're only going to do 4.1.1, which is to complete the fixed asset note or note 3. And we're going to prepare the asset disposal account. Because we often need the information from the asset disposal account, I will first do the asset disposal account before I complete the note. As on the note, I need some of the information from the asset disposal account. So we're going to look at the asset disposal account, so we need the information for the asset disposal. And there, the third bullet tells us on the 31st of August, equipment was traded in against new equipment. So the first important bit there is it was traded in. That will determine the opposite account, because if we dispose of assets, there's a number of ways we can do. We can sell it for cash, which would mean it is the opposite account is bank. We can sell it on credit, then somebody will owe us, which means the opposite account will be debtors control. The owner can take it, then the opposite account is drawings. We can donate it to a charity, then the opposite account is donations. But if we trade it in, it means we're buying a new equipment on credit, which means creditors control. So whatever we trade in will reduce the amount, so it must also go to creditors control. So that means the disposal bit will go to creditors control. It had a cost of 100,000. We're going to need that information for the asset disposal account. It had a loss of 12,000. That is also something we need for the asset account disposal. It was traded in, and the new equipment was bought on the 1st of March for 80,000. That hasn't got. Oh, okay. The equipment that was traded in was bought on the 21st. So the original cost price was 80,000. So that is also important. Cumulated depreciation to the date of sale. That is very important, which means I don't have to calculate any depreciation for the year. They give it to me to the date of sale, because in the asset disposal, I need the accumulated depreciation up until the date of sale. So that bit, very important. So now that we've highlighted, we went through all the information, we can start completing the note. So let's go to the answer sheet. The asset disposal. Know the layout of this account. On the debit side, I will have the cost of the item sold. On the credit side, I'll have the accumulated depreciation up to the date of sale of the item that was sold, and I will also have whatever I received for the item that I sold or disposed of, plus the account that it must go to. And then the difference can be either side. It will either be a loss, which means it would be on the credit side, because what I received was less than what it was worth, or the opposite account's a debit. A debit's an expense. So, and if it's on the difference is on the debit side, it means it's a profit on sale of assets. But let's work through it. So the first bit would be the year and the month. Let's just go and see when this happened. On the 31st of August 2014. So it's 2014, August. And it's the 31st. Opposite account, this is now the cost for the item that we disposed of, and it was equipment. So the opposite account will be equipment. It will be on the general journal, and the amount would be the cost that we paid for that item that we're selling now. It was bought on the 1st of March 2012 for 80,000. So that was the initial cost, 80,000. On the credit side, also 2014, August the 31st. Now I want the total accumulated depreciation up until the day of sale. So the opposite account will be accumulated depreciation. Accumulated depreciation, equipment. Okay, let's just see if we can get this one a bit bigger. Good. Accumulated depreciation equipment. It will still be on the general journal. All these transactions we will do on a general journal, and I can remember that they gave it to me accumulated on the date of sale, 33,930. So the amount 33,930. On the debit side, nothing else except if we've made a profit. So on the credit side, the other transaction I'm looking for is how much I received for it, and how did I sell it. Now I traded it in, as we explained previously. If I trade it in, it means it reduces the amount I owe on the new item I bought, and the new item I bought would have been a creditor. So it is creditors control. So every time we trade in something, it would go to creditors control. Transaction on the general journal. And what did I receive for it? They don't tell me. They just tell me it was traded in on new equipment, and the new equipment cost 100,000. So that new equipment has got nothing to do with this one that I'm trading in. So I do not know. I've got to still work that out. So for now, it is unknown. I'm not concerned. Maybe I've got all the other information, because the only other thing I need is either the profit or the loss. And there they tell me the loss was 12,160. If it's a loss, it means this is what it's worth. This is what we receive for it, the credit side. So it means this side would be less than that side if it's a loss. So a loss would be on the credit side. Another way to look at it, if I'm going to credit this account, I need to debit another account. And if I debit an account, it will be an expense, so it's a loss. Other way around would be a profit. So loss on the sale of assets. Loss on the sale of assets, still on the general journal, and they gave me the loss. I didn't have to calculate it. They told me it's 12,160. So now I've got all the transactions recorded here. The only one I need is that one. If